Good afternoon, friends. Thanks for joining this HDFC Defence Fund. Hope you are well and doing fine. I am Ashok Kanawala, uh, and with me is Abhishek Poddar, fund manager for this fund, and my colleague Ram, will be helping me moderate this call. Abhishek has been with us for last over 2 years, and he has an overall experience of 17 years of equity research. Before I hand over to Abhishek for his initial remarks on this fund, let me set the background for this NFO and why this NFO is being planned from our side. If you observe India's map, political map, and recently India celebrated its 75 years of independence, Amrit Mahotsav. And if you coincide that with the India's map, that you will always observe that India always have a challenges from its neighbors. And at the same time, India has a large waterfront on the southern side also. That also needs to be protected. As I said, that 75 years of independence, India never attacked anybody, but it always had to defend its borders. So starting right from 1947, when we had challenges on the Kashmir side, battle with Pakistan, and then thereafter in 61, 62 with China, then 65, then 71, then around 87, 88 with Sri Lanka on Indian Peacekeeping Force mission, then thereafter 99, Kargil War. So we had a lot of challenges in last 75 years from the external front. And last 30 years, we now also have a challenges internally in form of terrorism or from a militant groups. So India is not battling externally, but India also had to battle now internally also. And because of which India's expenditure on defense have been rising over the years. And what we observe that large component of our defense requirement is also imported. And somewhere the belief is from the government is that Make in India program and the Make in India program that we need to be self-sufficient or Atmanirbhar in the defense so that we can not only uh, support or defend our borders well, but we are always in a readiness mode also. So these are the initial thoughts. I just thought, let me share that it is because of India's unique positioning on the political map that we believe that this spending on defense will continue and there is a scope. And why there is a scope for it to accelerate going forward? So these are some of the thoughts that we will share. Abhishek will share with us. Will give us a greater insight why this is a very critical subject for us, for us as a country, and therefore where are the opportunities for us as an investor. So without ado, I now invite Abhishek. Abhishek on call are investors and distributors, and they will be keen to have your views or thoughts on this fund. And thereafter, we'll open for question answers once you are done with your opening remarks. Over to you, Abhishek.
Thank you, Ashok ji. Good evening, friends, and welcome you all to this discussion around the HDFC Defence Fund. So, straight away to the topic. This presentation I'll divide into three parts. One is that defense space, why defense space is attractive. Second part will be about the Indian defense sector, why Indian defense sector is attractive. And the third is when we discuss about the offering and the defense fund. So, starting. I think the key theme we are talking about here is that the world is changing, moving from a unipolar world to a multipolar world. And I'll take you back a little bit in the history. If we talk about the world before 1991, which is the Cold War era, the defense spending that nations were doing as a percentage of GDP was significantly higher compared to what we are seeing now. In those times, more than 4 to 6% of the GDP was being allocated towards defense spending. And we know that US and Russia were the key superpowers then. 1991, things started changing, and that was led by the dissolution of the Soviet Union. And from 1991 till almost in recent times, what we call is the period of long peace. During this era, we saw that the defense spending as a percent of GDP, which used to be 4% and above before, it has fallen. So that number now almost has come down to 2.5%. This era is also, if you think about it, this era is also where there was dominance of one superpower. And in fact, if you look at the data, that one country alone, which is US, was spending almost 45% of the global defense spending. So let's say, the global defense spending for 2021 was about $2 trillion. US alone was spending about $850 billion. During this era, we also saw that the Asian economies, they had a very low share of the defense spending. So essentially, what you have is on one side a very large player with a very strong military might. On the other side, you have very marginal players with 3% or 4% of the total defense spending allocated with them. So essentially, there is an unparalleled power. Now, the last 30 years of what you call an economic miracle of China or in the Asia Pacific region, what we are seeing now is that this is changing. The spending of the defense forces in Asia also is kind of catching up with US. And let's say if I talk about the data of China, which used to be only 2 or 3% of the defense spend, global defense spending in 1995, that has gone up to 14%. And it's kind of very close to, not very close, but it's still a sizable number when you compare with what is US is spending. I think what also happened in recent times because of the Russia-Ukraine conflict, probably that was a tipping point where we saw that countries started reassessing how much defense readiness they have and what resources they are allocating to defense. And we kind of searched across the different nations, and what we found that most of the nations, in large economies specifically, they have increased their defense allocation for next 5 years, 10 years. And we have put out some of the flags of certain nations who have already announced it. And if you notice, these are the countries like Japan, Germany, and all. These are the major economies. So what you see on the screen, the countries which are there, those will be about 60% of the GDP, global GDP, and they are spending more on the defense, and that is how the trend would be. So we believe that because of the many powers now, the defense spending allocation will change, where you'll see in next 5 or 10 years, a decade, there is a probability that the countries will start allocating more on the defense side. Moving on. This chart in front of the screen, it shows how the defense spending has moved between 1995 to 2021. Defense expenditure by countries is usually to keep up with the defense capabilities of the peers. And that is the reason to protect the citizens from unconventional wars as well as unconventional wars. Often, countries have large resource requirement for defense, and it tries to accommodate as much possible given the government finances. So as the country's GDP expands, it is able to allocate more to the defense, and that is when we said that as the nominal GDP grows for a country, the defense spending also kind of grows in sync with that. So the gist of this is, let's say in China, in 1995, it was spending $12 billion in defense, and that number has grown to $293 billion in 2021, almost 25x increase over a period which is in sync with the Chinese economic growth. So China at that time, let's say in 1995, was still spending 1.7% of GDP in defense, and in 2021, it is still spending 1.7%. But because the economy has increased so much, their defense spending has almost grown on 25x. The data for India is also there. Between 2000 to 2021, the defense spending by India has grown by almost 5 times. Still, the Indian defense spending is much lower than what USA and China is spending. US spends about 10x of what India is spending, and China is spending 4x. And as I said, that the defense capability that you want to acquire is not about yourself, but it is more about what your peers are doing, because you want to protect your citizens. You have to keep up with the peers. So over the longer run, the gist of this slide is that the defense expenditure tracks the nominal GDP growth, because as the country grows more, they are able to allocate more sources towards defense. And the last theme on the defense space, why we think it is attractive, is self-reliance specific to India. Here, I will break it down into two pieces. One is about the defense readiness. Self-reliance is very important for defense readiness. And the second part is about the economic gains of self-reliance. So on the defense readiness, so traditionally, what we understand is that India has been a very large importer of arms from the different countries, and our dependence on the domestic industry to that extent has been limited. What it does is that defense is a very evolving field where there are always some technological developments which keeps on happening. And if you are importing an arm from other country, you are always dependent on that country for the upgrades and improvements, and that generally comes with a lag. So always self-manufacturing is much better option because you are getting a timely upgrades. Second is, which is about the war. God forbid, if any country goes for a long conflict, the supply chains are very, very important. And as we saw in the Russia-Ukraine war, if you look at the media reports, so you understand how supply chain is, very, very important to keep the country, on its toes and is able to, fight back. So in cases of long conflict, to assume that you will be okay to depend on a third or a fourth country to, meet your supply needs, that is a difficult. So that is where the self-reliance is a very important point. The second factor is the economy. Over 2018 to 2022, India was the largest importer of arms globally. It actually accounted for 11% of the global imports. And that obviously means that foreign exchange, reserves are going down and you have a current account deficit. So the moment you start doing self-reliance, that comes down. And, the extension of that is jobs. The moment you are importing more from other countries, you are kind of outsourcing jobs to other countries, which could be created in India. And on the economic reason, the second reason for self-reliance is the export potential. Because of the R&D focus, if you are able to export more, it kind of brings economic gains to the country. So with this, I'll move on to Indian defense space. Why do we think that Indian defense space is an attractive point at this time? In this slide, we are explaining the four key drivers that we think will drive the Indian defense sector. The first one is to deal with the increase in capex spending. And India is a growing economy. In the last 10 years or a decade, India's capital outlay has grown closer or in sync to the nominal GDP growth rate of 9 to 10%. So that becomes a base. And if you look at the India's economic potential of next 5, 10, 15, 20 years, this is a long-term story. What we are more excited about is the next 3 points on the growth driver, which is all about self-reliance or Atmanirbharta. The first point of self-reliance is how it benefits the Indian defense industry is import substitution. Traditionally, India has been large importer of arms from, we know the countries would be European countries and Russia. And, as early as, as late as 2019, almost half of our defense purchases were led by imports, and only half was going to the domestic industry. This is changing now because of the self-reliance. And I'll talk about more on this in the supporting slide. So this adds to the growth of the base growth of increasing capital outlay. The third point is export growth. Because of self-reliance and a lot of R&D expenditure that you have done, the export share is set to rise. In fact, in India, in last 8 years, the export revenues have gone up by almost 8 times. In 2015, it used to be hardly $250 million. And today it has grown to $2 billion. Yet, it is very, very low compared to what is the potential out there. And this is also, I'll be talking in the supporting slide. And last but not the least is the growth in defense ecosystem. While I did talk about the import substitution, that India started to produce more internally, and that is leading to lesser imports. However, when we are producing a large platform, let's say an aircraft, combat aircraft, that is, let's say, made up of 400 different subsystems and components. Now, a lot of those components are being manufactured in India, but a lot of those components also are getting imported now. What I mean by growth of and development of different ecosystem is that those companies and who can produce those subsystems and components, even those are rising, and that is also led by the private companies' participation in R&D. This is the another leg of growth. So to summarize this slide, what we have as a base is the nominal GDP growth, which is the base growth that is happened in last few years, and there is an expectation that this should happen. To add to it, there is going to be a growth led by import substitution, export growth, as well as the growth in value addition in India. Moving on. This slide I've already discussed about growth in the capital spending, which is in sync with the nominal GDP growth, and which was about 9% in the last decade, CAGR of 9%. I think on the right side, I just want to highlight one more chart. If you look at 2000, that time India's economy size was about $500 billion or it's $500 billion. That time we were spending 14 billion. And move forward to 2021, the number is 3.2 trillion economy size, and the defense expenditure has gone up by almost 5x to about $80 billion. If we take the next 7 years or next 25 years view, and I put up a number based upon the India's chief economic advisor's estimates and ENY report. And if, let's say, our economy becomes 7 trillion or $26 trillion, expect a similar increase in, there is a possibility that a similar increase in defense expenditure may also happen. Now, why a country would spend so much on defense? This is a very important slide where Ashokji initially had made in his remark that India has seen a lot of conventional wars, and you have to be ready for it, even if the war doesn't happen. At least you should be ready to have a signaling effect to the other party that you are capable enough to defend the country, and that itself is a big message. Also, there is a rise of militant groups because of which you have to fight a conventional war. So this point cannot be stressed more, and I think the importance is easily understood. But what I want to highlight more here is that as per World Bank report, the greater than 50% of world's poor are living in fragile and conflict-affected situations. So, this number itself is staggering, and when we saw this, we were also quite surprised. In fact, we say that sub-Saharan Africa is which is one of the most destitute region of the world. But economies in fragile and conflict situations, their situation is even worse than that. There was a survey done by Gallup, which was published in World Bank report, which says there's people who are living in fragile and conflict affected situations. The expectation of them that their lives will improve is only 50%. It is even worse than what people are living in sub-Saharan Africa. And that is the reason that defense is a very critical feature of India's overall planning and fiscal expenditure. Moving on, this is about the growth driver 2, self-reliance. On the left side, you see a chart where how much Indian defense forces are buying from domestic sources that is being displayed. India used to buy 54%, and that has gone up to almost 68% now. The expectation is, as per the budget set for 2024, that it will increase to 75%. The government policies clearly indicate that this could be even higher number in future. So we should see the trend going. In fact, all the three forces, Army, Navy, and Air Force, there could be enough room. There is enough room for indigenization to happen. This is the data which shows how much indigenization in these three forces has happened. One important data point I wanted to highlight was on the right side. If you look at this chart, this shows that how much of domestic, so this is the approval for purchases of defense by Government of India. And if you look at the 2023 data, this shows that how much purchase approvals has been approved by government or Ministry of Defense for the defense orders. This has been the highest year, 2.73 lakh crores. And out of this, 99% is directed towards domestic industry. And just to remind that this is not there yet in the order book of the companies or the revenues of the companies. So this is something which will benefit the domestic companies in future. What is leading to indigenization on this self-reliance? The policies are clearly favorable. India in last 2 years has banned imports of 411 items for defense. And this is just the policy initiative. Because it takes time for the companies to develop and manufacture, and this to come in order book, this is yet to reflect in the revenues of the company. Also, 74% FDI in defense has been allowed, and 100% private participation has been allowed. 74% FDI in defense, it has already started to reflect. India has already signed 46 JVs with foreign OEMs in defense space, and about 500 crores of investment has already been committed. Also, India is actively pursuing export opportunities with many countries. And in fact, we keep on hearing that, our defense minister is visiting so and so countries. And there has been an active engagement here to increase the export opportunity for Indian companies. The way defense defense sector is expanding today, in last 5 years, almost 6 private companies and 5 PSU companies have been listed. They form about 54% of the current investable universe. So what is leading to self-reliance, and what is it that differentiates the defense companies? I think it's clearly technology, and that's the reason that barriers to entry for defense sector is very, very high. In fact, the technology, sometimes it takes 10, 20, 30 years of R&D to come for a meaningful, improvement in a particular technology. On the right side, we have a chart which shows how much India is spending with DRDO on R&D. And India used to spend about 8,000 crores or so in 2010. That number has gone 3x to 23,000 crore. On top of it, even the large companies are having a significant portion of R&D's budget. So almost most of the companies, if you look at the average number, about 6 to 10% of the revenues is being spent on R&D. And this has led to good success in indigenization. Some of the platforms that India has already indigenized are mentioned here. So howitzers is mostly made in India now, 100% indigenized. Submarines, it was not domestic R&D, more to help by the transfer of technology from other nations. But now most of the submarines are manufactured in India. I think there was a Scorpion class submarine which has just been delivered to Indian Navy, 6 of them. Indian aircraft carrier that we all know about in the news. India manufactured aircraft carrier with more than 50% of the content was indigenized. The second benefit of indigenization is export growth. India's export growth has grown from $250 million in 2015 by almost 8x to $2 billion in 2023. And this has been a great number. But while the number and the growth number looks good, this is still a very, very small drop in the entire ocean, and that I'll talk about in the coming slide. Some of the items that India have already started to export includes Dornier 228 utility aircraft, advanced towed artillery guns, BrahMos missile. This is a big success story. In fact, in its space, it's a supersonic missile, and it flies with a speed of 3.6 Mach, and it is considered one of the best missiles globally in its space. Akash missile system is another success story in India. Recently, Ministry of Defense placed a very large order to Indian defense company for this missile system, and I understand that even this could be a potential export platform. So despite some success that we have seen in exports, there is huge opportunity waiting for it. The global defense market could be in excess of $200 billion, and it is entirely captured by either US or European nations. So on the right side, there's a pie chart which shows which country is having the largest share of the global export market in arms. US is 40%, Russia 16%, and if you look at, there are other European nations, the share of India is hardly 1% or so. So this $2 billion is nothing compared to what we can achieve in export, especially given that we have covered some ground on the R&D and technology is there. And also the cost competitiveness of India will also play a very important role. And the fourth key driver is the development of the defense ecosystem in India. Think about it that, so I'll give an example here that China is one of the largest exporter of mobile phones globally. But, when we talk about it, China still captures about 40 to 45% of the value chain. So it means that for the 60% of the part, it probably is an assembler or is importing it. Now, if I talk about the defense, space as well, in case of large platforms, let's say warships and combat aircraft, a combat aircraft is made up of 400 components and subsystems, out of which not everything is manufactured in India. But because of the rise of the private companies, we are seeing that there is a big improvement there also, that more such components and subsystems are now getting manufactured in India. I'll take an example that there is this radar warning receiver that I've shown on the bottom left side. This is a equipment which detects if any radar is tracking the aircraft and it warns the pilot. This was earlier being imported, but with the R&D and technology upgradation, this is now being manufactured in India. This is fitted in an aircraft. Similarly, there are other items. The benefit of this is that if you look at the right side chart, this shows that how much of the components the large companies were buying from the domestic market and import. So this is the import content, and this is gradually declining, and more share is being captured in the Indian company. This is mostly captured by the private space, and that's the reason we are seeing that private revenues have shown a strong growth until now. So here are some of the key case studies to support the argument that we have been making. This one comparison with the US defense space in India, and Indian defense space is at a very nascent stage. I'll take you back to 1993 in this chart. In 1993, the top 5 US defense companies, which is Northrop Grumman, General Dynamics, Raytheon, Boeing, and Lockheed, they combined had a revenues of $73 billion. Now, $73 billion, just to put things in context, in 1995, India's entire GDP was $500 billion. So just top 5 US companies were having 15% of the India's GDP as their revenues. That's a very big number. And you would have assumed in 1995 that, these companies are matured and they have already seen such a big number. But in spite of that, in last 30 years, these companies have grown at a CAGR of 6%. And today, their revenues is $352 billion. And this is just the 5 top defense companies. There are many smaller defense companies in there also. Now, what is leading this is that, as I said, that as the economy expands, the defense expenditure expands, and there is going to be more purchases by the forces. So just to put this in context, overall Indian defense companies, the total revenue pool is only $10 to $12 billion versus more than $350 billion for the US companies. So Indian defense companies, we believe, are in the early growth stage and has a long runway for growth. This slide is on the indigenization success. This photo that we are seeing there is of light combat helicopter. It is also called Prachand. It has been inducted in the Indian forces. Helicopters have been a very good success story for Indian defense manufacturing. I just want here this right hand side, there is a table which compares the LCH, the Indian made, versus Apache US, which is one of the most successful helicopter programs globally. So we have shown some parameters over there. First is the service ceiling, which basically means that what is the altitude to which it can fly, and LCH can fly up to 6.5 kilometers versus Apache, which can fly about 6.1. So LCH has a better reach. There are other parameters attached. Now, on the last row of the table, you will find a number which is price tag. India advantage and cost in low cost is clearly at play. Apache costs about $40 to $54 million versus the cost for Indian LCH is $20 to $24 million. So the point of making this argument is that with the technology and the lower cost, there is a good chance that Indian defense companies could grab a good part of the export market. Indian missile program has been a great success. Indian missile program started in 1983 and went till 2008. It was led by late Mr. Abdul Kalam. India developed 5 ranges of missiles: Prithvi, Akash, Nag, Trishul, and Agni. And in fact, in terms of missiles, India is mostly indigenized, except for certain missiles which we don't manufacture, but those are very far and few. And that is benefiting the domestic companies of late. So I think we have shown a press release from PIB on 30th March 2023 that for Akash missile system, an order was placed for 9,100 crores for Indian Army, and that's a large order. Also, on the right side, we are showing one missile program there, which is QRSAM. This is again India indigenously developed missile, which could again be inducted into the Indian forces. This slide talks about indigenization of the combat aircraft. Light combat aircraft Tejas. This was again, this is a culmination of 4 decades of R&D. And this was developed by ADA, Aeronautical Development Association, HAL, and more than 200 defense labs. This is a 4.5 generation aircraft. It's a light aircraft. Already 83 aircrafts order has been placed for the Mark 1 version, and before that 40 aircraft version was already placed on the Indian company. India is also pursuing export opportunities for LCA Tejas. So these are just some examples. We could not put more, but there are many platforms that Indian companies have developed. So moving on to the fund, HDFC Defence Fund. This fund is going to invest greater than 80% as the core portfolio in defense companies whose more than 10% revenue is from defense segment. And those are the stock listed in AMFI classification of aerospace and defense, explosives and shipbuilding, and stock present in Society of Indian Defense and Manufacturers. The focus of the portfolio will be on growth, quality, and at reasonable valuations. Investment will be across large, mid, and small cap names, and the benchmark will be Nifty India Defense Index TRI. This is the universe right now. We have 21 companies with a market cap of close to 3 lakh crores. And just to highlight here, and this includes 2 large cap, 1 mid cap, 18 small cap. There is a mix of private and public sector companies. To highlight here, out of this 21 companies, about 11 companies have been listed only in last 4-5 years. So this is where this is a nascent sector in early growth stage, and there is a long runway for growth. This is what it shows, that the sector is still building up and finding its feet. There is a chance that more companies come for IPOs and more get listed. So we believe that the investable universe will expand. And also, if more companies have their revenues with more than 10% in defense, that also becomes investable in this space. This shows the Nifty India Defense Index, which is the benchmark for the fund, with the Nifty 50 index. The Eps Growth over FY 18 to 22 for the Nifty India Defense Index was 17.5% CAGR versus 12.9% for Nifty 50. Companies in the universe have healthy balance sheets and good growth profile. The right-hand side shows the order book versus revenues. Defense companies today have total revenues of about 68,000 crores and an order book of more than 2 lakh crores. So it's almost 4 times order book to revenue ratio. This gives a visibility on the revenue growth. So want to highlight here that the indigenization story that I talk about and the export growth story I talked about, that probably is not built into the historical numbers, because the banning of 411 items that has only happened in last 1 or 2 years. It is not yet reflected in the order book of the companies. And also export is a very minuscule number compared to the potential. So that is not already there in the numbers. Defense sector is a very strong barriers to entry, and technology is the key differentiator here. And it takes 10, 15, 20 years to come to a meaningful milestone, achieve a meaningful milestone in technology. That is why the ROEs that these companies enjoy is good, high teens, as you can see. It was 19% in 2020 and high teens before. Balance sheet is strong with low working capital commitment. In fact, these are the large platform manufacturers are governed by the defense acquisition procedure, where the payment terms are mentioned. So I'll just take an example that in case of shipbuilders, 10% of the money is given on signing of contract. Then there are milestone payments for different completion schedule. These companies, defense companies in the universe, had a cash balance of 42,000 crore, but this included the advances also. So as they do work, some cash reserves. The idea of showing this slide is that the capital employed to that extent is limited because you have received the advances against the orders, and you have a low net working capital. This slide shows that how does the revenue shape up for let's say an aircraft manufacturer. Defense equipment generally have a certain life. Let's say if I talk about a combat aircraft, it would each part in that aircraft, because it goes through so much stress, there is a certain life. Let's say engine would have 2,000, 2,500 hours, after which there is a replacement required. So the companies, not only they make revenues when they are selling the product, till the life of the cycle of the particular equipment, there is a revenue made on repairs and overhaul. And this slide just shows that, let's say if an aircraft program goes for 35 or 40 years, then the companies will keep on generating certain revenues till the life of that aircraft is there. This slide is about the ESG considerations. ESG stands for environment, social, and governance. Social criteria deals with the well-being of communities and maintenance of living standards, and defense has a very strong social criteria. So I think it's nothing hidden from anybody, but lessons from past is that weak defense has always resulted in conflict zones and hardship for citizens, whether in the past or even today. And strong defense companies, it equals to citizen well-being. Weak defense doesn't equal to peace and prosperity. In this slide, we talk about the risk and mitigants. The key risk for the sector is government policies have large ramifications for this sector. Second is that buyer concentration risk is high because government of India is a large buyer for defense companies. On this, I would say that defense is critical to a country's requirement, and hence there is a predictable policy framework that governments follow. Also, current policies are favoring Make in India, so they are favorable to the industry. On the buyer concentration risk, where government is large buyer, it's pertinent to highlight here that generally defense equipments require a lot of upgrades and modernization. In fact, you always are worried that what technological advances the peers are making, and you want to be at that level or even better. And that's why the need for upgrade always happens. In fact, every 10, 20, 15, 20 years, depending on the equipment, there is a lot of obsolescence happen. So the equipment that we, let's say, bought from the Soviet era, some of them will be very, very redundant and may need a lot of upgrades. So that means there is a constant demand. So despite government being the only buyer, that kind of gets mitigant. Also, India is looking actively to pursue export, so that will get diversified. This is a sector fund, so it does carry a high risk, and hence we think that controlled exposure is required. The concentration is high because of the number of companies there, but we believe that the companies will expand as we move ahead because this is in the early growth stage and the sector will grow. So to summarize, why should you invest in defense fund? Multipolarity globally is leading to increased global defense spending. India's strong economic growth would aid the growth in defense spending, led by the growth in nominal GDP, self-reliance, which would help import substitution, export growth, as well as the development of defense ecosystem in India. Also, R&D focus and manufacturing capabilities in India will also aid the export potential, where we have a very low market share. And the last point is that Indian defense companies display a very strong order book, have healthy balance sheets and good growth potential. Ashokji, over to you.
Yeah, thanks, Abhishek, for a very, very detailed and a very comprehensive presentation. May I just request you to roll back some slides? Go to the first slide before we start taking questions from people. I know there are some questions, but I just thought that we put a perspective. If you can just roll back slide towards the first slide, which, yeah, next slide. Global slide. Next slide. Next slide.
This one?
No, next after this.
Sorry.
Yeah. So this is a very for viewers. This is a very critical slide. That slide, previous one, where you have shown China. Now, if you see this is a 25-year story. And now we have entered Amrit Kal, where we also have some aspiration to become a developed nation by 2047. Now, what can happen in a 25 years when a focus of the country or government changes and to become more self-reliant on the defense side? Now, this is the very good slide that you said that 25 times the expenditure of China has increased in last 25 years, right? India's expenditure has increased only 7 times. US was always a superpower, and despite that, $300 billion has become today roughly $800 billion in 25 years. Now, we know that what was China 25 years ago. Today, China is the second largest economy in the world, right? And it is talking an eye to eye with US as far as economic giants size is concerned. Now, today's time, being an economic giant alone will not suffice. You have to supplement this by your own military might. You may not enter into an action, but you have to supplement by your military might. Now, China is having some kind of trouble with the global powers on the South China Sea when they are having a dispute regarding Taiwan, and they also have been preparing themselves how to cope up with the global requirements, and therefore this expenditure. As economy size continues to grow and you want to become a leader in the global, you also have to supplement by your military might. Now, India today is a $3 trillion economy. We have aspiration in near future to become $5 trillion economy. Will become $7 trillion economy, and so on and so forth. Now, if this is the aspiration, today we are fifth largest economy by size, and in next few years we will be third largest economy by size. Of course, not as big as China, but we have aspiration to be a third largest economy. If your economic sizes will continue to grow, and with the kind of challenges you are having on the border side, whether on the western side or on a eastern side or even a northern side, and of course, as I explained on the southern side, the waterfront, your spending on defense has to grow. Now, how this defense spending will be met is a question before us, which Abhishek explained to us, that this government is looking to supplement this requirement by producing more in the country, because if you continue to import, not only your defense readiness gets affected, at the same time, your foreign exchange reserve also gets used, and to that extent, your current account deficit also gets affected. So it's a chain reaction, and therefore, if you want to become a superpower in terms of economic size, you also have to supplement by your military might, and that's what this government is also preparing itself when it has an ambition to become a developed nation in next 25 years. So definitely, this is not a 1 or 2 year story. It is a multi-decade story for India. As we continue to prepare ourselves, and getting into defense ecosystem is not easy. Every country has to prove their mettle by running their course for a couple of years, by proving qualities, meeting standards, and therefore they become part of the defense economic system. And therefore, today, government, because it has a constraint in terms of its fiscal deficit, they cannot spend beyond a time money, and therefore privatization, so that more and more private capital can keep coming into this defense and keep on supplying those requirements to the government.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.